Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome back to the Wendell Effect. My name is Brandon Wendell, and I'm going to guide you through my view on the financial markets. So we're going to go ahead and jump right into it. Put on my blue blocking glasses here and jump into this. So again, just need to put up a couple of reminders before we get started that we are not registered broker-dealers or investment advisors. Looking at all this information from an educational standpoint, not telling you to buy, sell, or hold, or giving any personalized recommendations. And there's past performance is no indication of future results. We're also not subject to trading restrictions, so it could have a position in a security or initiate one at a time. So that being said, if you want to stay in touch with me, please do. Let me move this around. There we go. You can go ahead and stay in touch with me by email. I've got a new email address for this, and it's just my name, brandon.wendell.cmt@gmail.com. You can also search for me on Twitter @TraderBdub, and of course, you can search for us on the YouTube for the Wendell Effect. So again, welcome back. And for this week, I'm actually going to do things live rather than normally I do the slides and have everything prepared, but I decided to go ahead and kind of show you what I do and how I do my analysis. So we're going to go into the weekly market analysis and do it live, starting off with the equity index futures, then moving into energy futures, transitioning to sector analysis after that, and we'll take a look at individual markets and see what kind of opportunities we might have for those markets. Jumping into the Indian markets, and then finally wrapping it up with a little bit of crypto as well. So we'll go ahead and do all that analysis, as I said, not pre-prepared, but actually live in the markets to see what is going on for this week coming up. So starting off for the week of September 4th, we're going to jump into the equity markets. And what I'm going to do first actually is shrink this down and go into my comparison chart because I want to see which market is leading us. And basically, I've got this study started from the decline that we recently had back in August. This is August 16th. So I do this to, again, let me know which market is leading us, and that leader will usually tell us when we're going to stall out. So the leader to the downside right now happens to be the NASDAQ, followed closely by the Russell 2000. And then you got the Dow, which is the weakest of the trend to the downside. So looking over at the NASDAQ first, as that's number one, let's go there. And make sure I get a clean chart. All right, we are. So we're on a weekly chart of the NASDAQ, and I'll go ahead and put that in here, NQ weekly chart, so we don't forget. And you can see that we had a bit of a retracement, but when we retraced, we never got into bullish territory. We kept the RSI in bearish territory. That's suggesting the new move down should be able to take out prior lows and make a new fresh low. If we're looking at the previous impulse, really it's all of this move down, and then we retraced. You can see that we've got downside targets of 11,122, and ultimately on the daily, 95.04 for the next target. Yeah, we don't have any kind of demand anywhere nearby. Maybe if we go to a continuous contract, let's try that. On the continuous contract, I'm going to clean this up again as well. And now on the weekly, if I go back, I might actually find a demand zone. It looks as though we don't really have anything right in here. This has all been tested. I mean, yeah, maybe we have rally, base, rally, but again, we kind of tested that very quickly. So the only thing that we have as a fresh demand is way down here at about 93.45, and then even just below that as well, we got kind of rally, base, rally. So not much to hold up the NASDAQ, to be honest with you. We could free fall for quite some time here to 9,300. So going back to the specific contract, again, I had 11,122 for the first target, 9,300 or 9,500 basically is that second measured move. So it looks pretty good for our target. Going down to the daily time frame, let me refresh and change that to a daily. There we are. Well, not really much change here. I mean, we're still getting the same impulse down, not really seeing, well, I guess we have a zone here. Drop, base, drop that formed at about 12,896. In case we get a small rally, that may be where we bounce. We also, well, we are coming down to a tested demand. As you can see, we had rally, base, rally tested once. We're into that zone, but we got way too much bearish momentum for this to hold. So we should be able to cut right through this area. Might get a little pause on Monday, but overall, not expecting much out of that. So overall, the NASDAQ is showing that we should continue to move down with plenty of bearish activity and momentum. And the next demand, like I said, we might get a small bounce here Sunday going into Monday, but that's all it would be, is a small bounce. And it would be 11,980. If we move up, I don't really have any fresh supply. We already tested it just now on the 4 hour. And I don't see us getting this high. Even though it's the next level supply, we could just turn around. But we are kind of weak on the downward move, so I'm expecting a little bit of a bounce again early in the week, Sunday or Monday. We should get a little bit of a bounce before we continue to push to the downside. Just watch for that. If anything, I would look at right here. We got the Fibonacci extension, or sorry, retracement. After we already bounced there, you can see we went up about 23.6 and 38.2. I don't see us being able to get much beyond this 50%. So if we do bounce again on Sunday a little bit, I would say 12,619 is our high before we continue to push down. We can go all the way down to 95 to 9,300 on the NASDAQ. It can get pretty bearish. That's not going to happen this week. Okay, this week we'll see some moves to the downside, but just not that much. As far as initial thrusts down, let me just see. Kind of already moved that. This little correlation actually, but it moved a little beyond. Yeah, I don't really have any close downside targets. Thus, yeah, this is a fresh demand right here. Nothing else below that. Nope. So, overall, my opinion and ideas for the week would be we should bounce a little bit right around this 11,980. Get a small bounce up, perhaps as high as 12,619, but it doesn't look like we'll get that high. We might end up stalling out here at the 477, then continue to push to the downside. And as far as nearby targets on that downside push, it kind of depends on where we stall out. But I'm looking at, let's see, 12, 477. Okay, first target about 11,734, and then second target 11,274. So that's what I'm seeing right now on the NASDAQ. Moving over to the Russell, go out to the weekly time frame here, make sure I clean up the chart as well, look at the big picture, and refresh. There we are. You can see we moved a little bit higher up as we retraced, but again, we could not get into bullish territory, this being the weekly chart of the Russell. We ended up holding, well, we had rally base drop, basically a supply right here. You can see rally base, 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 and drop. So we ended up hitting that supply, but like I said, the main thing was we couldn't get into bullish territory on the RSI, so that's suggesting this current impulse that we're experiencing should take us to fresh lows. So if we measure our preceding impulse, which was somewhat interrupted, our retracement, and we have extensions now for our targets, we're looking at target number 1, 1728, target 2, 1540 to the downside. So we drop this down to the daily time frame, get a little bit more fine tuning on our analysis, and as of right now we're currently impulsing down, but we are reaching into a little bit of demand here, aren't we? So let me clean this up and mark off the zones I'm talking about here. You can see that we're coming into weekly demand. Now the NASDAQ is still extremely weak and could cause this to drop right through these zones, but there are a couple of zones right here that we're coming into, so definitely bearish. If anything, it's a small bounce that we're likely to get, not a really big turnaround at all. And I was kind of curious to see when we were completing this impulse, well, it's suggesting we should go down to the next demand zone here. Like I said, we're already pretty well through this one, so if we get a bounce, it'll just be a very small bounce, but ultimately I would say by the end of the week we should be in this range right around 1700. So you see 1708 to 1776, that's that overlap right there between the Fibonacci extension and the demand zone. That's what I think our target's going to be for this week. So not expecting a huge drop, but overall a bit of bearishness in the markets. If we take a look at the seasonal moves in the markets, let me go ahead and log into this real quick for SeasonX. Forgot to do that. Okay, so we can go into the popular instruments and take a look at the NASDAQ and see what the overall seasonal move is for the past, say, 15 or even 25 years. We can go back pretty far here. You can see that September is actually somewhat bearish typically. So if we go into September 4th, and well, we can start looking at just the month. So Friday, I believe, is the 9th. Let me just make sure. Yeah, it is. So for the week, whoops, I did it wrong. Starting on the 4th, which would be Sunday, going to the 9th, the end of the week. Overall, it's kind of mixed. We got half and half, up and down. So there's no real bias in either direction for the market. However, later in the month, we definitely have a negative bias here, bearish bias. As you can see, late September into October, it's much more bearish. 70% of the time, we go to the downside, only 30% upward trends. So, I'm expecting to see more bearishness this week than bullishness. And, oops, I'm on the wrong page here. Sorry. There we go. So, on this Russell, if we do get a little bit of a bounce, I wouldn't be surprised, but I don't see us moving down much further. We do have a target, as you see, that's 1708 to, 1768 to 1776. And if we happen to be retracing it all from where we are right now on Sunday, there are possible pullback targets. You can just clean this up. There we go. And you can see the retracement values. That's where we might be able to get in for a new short at 1839, 1865, or 1885. So that's kind of what I'm expecting. We go down to the 4-hour time frame and see if we can fine-tune this, if there's any zones in the way. And there is. Right before the 38.2% retracement, we actually do have a drop, base, and drop right there. See, we came close and started falling away. So there's a lot of selling pressure in that area. 1851 to 1867. Maybe look for a short in that opportunity in that area. As a matter of fact, I also want to check. Yep, 889. So we may end up meeting up with the moving average as well. That's something I watch for. I have a strategy based on that. And kind of an LA wave catching wave 3, which is usually the longest wave, by hitting that 89 moving average at an area of supply. So it does look like everything's kind of aligning for us to potentially short the Russell right in that 1865, 1870 area. So keep an eye out for that. I'll go over to the ES now. And again, clean up my chart. Go to the weekly time frame on the ES. Same thing, we had that rally up. We did make a higher high, but we could not get into bullish territory on the RSI. So looking like we should make a fresh low this week, or not this week, but we should make a fresh low on this bearish move. So the bear market is not done. Okay, we've got our thrust down retracement, and we should be looking for a new low to be coming up within the next couple months. So if I bring in the actual targets, there we go. We got one target here at 37.15, and the next target 33.36.50. Now, in the meantime, if we go down to a smaller time frame, daily, see if there's any demand we might be bouncing at along the way. We're not at one right now. There's a demand a little bit lower. And actually, this is drop 1, 2, 3 basing candles. Not the best move out, though. So I think we might just do a small pause in the downtrend. I don't see a real big bounce coming out of that, to be honest with you. And if we do, again, I don't know where the bottom is going to be yet, so I can't really throw in a retracement. Not seeing anything, looking to engage in the short again. I don't know if we'll pull back this far, but this would be a great shorting opportunity on the 4-hour time frame. That area, rally, base, and drop at 41.83, 42.17. Problem is, I just don't see us getting back that high. You see, we already pulled back a little bit. We had a bit of divergence right here. Prices tried to move down. The indicator wasn't doing it, though. Pretty much holding steady, right? Maybe a little bit lower, but not as much as it should have been. So we corrected back up into this little area of supply already. Drop, base, drop. There it is, retesting. Looking like we're going to head down. Now, we did try to make a new low. We just failed. We almost did. We didn't quite make a new low, as you can see. And the momentum was actually a lot stronger to the upside than it was to the downside. So could we go a little bit sideways? Yes. Will we pull back and go up? Probably not. It's looking more like a sideways move coming. if we do pull back a little bit, like I said, 23.6 is probably all we're going to get. We're not going to get a huge move to the upside, at least not from what I can see here. So yeah, you see as we came down and bounced, we did already go to about 38.2. So I see us maybe pulling back in that area once again before dropping down. And then finally the Dow. I'll start off with the weekly chart once more. Clean up the chart, so we're starting fresh here. And this was a little bit more bullish, but still could not get into bull territory. So we are sitting at a weekly demand right now. I believe this has been the strongest out of the markets, but it's also looking pretty weak altogether anyway. So, okay, so going down to the daily time frame, and we are also at a daily demand when we look at this. So we got a lot of demand coming up and a little bit more bullishness here on the Dow than we had on the other markets. Still overall very bearish, so we're likely just to go a little sideways. You can see when we tried to bounce here at this demand, we really were just met with a lot of selling pressure, and the momentum just isn't there for us to rally much. If I go all the way down to the 4-hour chart, what's wrong? Keystroke, sorry. Yeah, I don't see anything here. So again, going back to the daily, if we get a pullback, I'd look at a small retracement. And I doubt we get it all the way back up to 61.8. It looks like we should only pull back maybe to 38.2%, about 32,350. So again, if I go down to the 4-hour time frame, it doesn't really line up with any kind of zones here, so just be careful. Really, I want to short the strong markets, not the weak markets. And the weak market is the Dow when you're talking about this trend to the downside. So overall, look for the NASDAQ and the Russell to lead us downward. Look for the shorting opportunities on those markets to take us down to those new lows. So moving along into the energy markets for the week of September 4th, I'm going to start off with crude oil, and we are in the October contract, so I'll start off there. Again, going from the big picture, working our way down, and on the weekly chart here, we are basing sideways. Notice the mixed red and green that we're getting in the candles? Not really much of a surprise. We're sitting just shy of this weekly demand. Oops, there we go. You got rally, base, base, and rally. So it didn't have all the follow through for the momentum. You see the close higher here, but then we had one new high. We didn't have a second new high. So we've lost momentum. It's not the strongest of demand, but it is demand, and we're holding. And you notice we can't seem to get below 40. So that does show there's a little bit of buying pressure going on here. We're just likely to keep going sideways. So watch for a false breakdown and then a push back up inside the range. When I say the range, I'm talking about the move between, I guess it's about 86 up to 98 would be the top side of the range. So we'll see. But as far as the momentum, you can see we made lows here below 40, except for the last little dip that we had on the 1st of September. We couldn't actually get below 40 anymore. So that's showing that there's a little bit more bullish pressure creeping in, and we could get a pullback here. So keep an eye out for that. This is on the daily, yes. And if we retrace, this is the correction we would have after a move to the downside. So we'll drop down to 240, and on the 4-hour, we actually do line up with a couple of zones here. Notice at the 50% retracement, there's also a supply zone. So that would be a pretty good opportunity to potentially re-engage the bearish trend and short there. We already missed this one. You can see we retraced back 23.6. Hopefully it's not the end of the move, because it'd be nice to be able to get in, but there was drop, base, base, drop, and it did have the follow through. You had the new low, 1, 2 follow-up candles. We came into that and started selling off again. So we'll just have to wait and see what happens with this momentum, but we might have already missed the shorting opportunity. And if it did, if that was the move down, basically we had impulse, correction. Target number 1 is right here at 86.18. Target 2 takes us down to that daily demand of 84 basically before we get a small bounce. So I'm thinking we could get a false breakdown, continuing this downward move to this 84.04 area, then look for it to snap back up, maybe as high as this 50% retracement. Okay, so what I'm kind of seeing for this week is continuation down, either to the fib extension or more likely to the demand zone, with then the bounce up. What happened here? To the supply zone before continuing the overall downtrend. So just gotta be patient, and there's opportunities to play the counter trend move. Let's see if there's a good demand zone here that we might be able to play on the counter trend. Not the best, but there we go. Clean this up more, and basically waiting for it to, there we go, remove, kind of collapse into this area. And where's the trade opportunity? There it is. Right about 82.72. There it is. With the target just before supply and the stop loss just below this area. Look at something like that. Coming into that and bouncing. Actually, I'll clean this up too. So you can possibly play the move down intraday or on smaller time frames. Once you hit that demand zone, look for the long and the nice bounce up towards supply and then re-engage again to the downside. So definitely some opportunities here on crude oil. If I go to nat gas now, start off again on the weekly. Whoops, I typed in wrong. NGV 2022. There we go. This is now on the weekly. And previously, I was expecting a bit of a move to the downside, as you can see from my chart. From last week, I guess. Let's see what happened with it. Yeah, this was the head and shoulders formation that we talked about. Notice left shoulder, head, right shoulder. So what happened? Well, it did break down. It did bounce back up. We had a kind of a false breakdown here and retested. Continued down. And it looks as though we're pretty much following the way it expected it to, because I kind of expected a pullback. And there's your retest before it continues down. Anyway, so that one worked out. Hopefully you guys were able to take advantage of that, because I predicted that last week. Anyway, let's go to the weekly chart and just kind of follow up and see what's happening. We made a new high, but when we made this new high in price, you can see we did not in the momentum. We were way off there. That's a huge divergence, and that led to this pullback last week that might continue. I don't see why it shouldn't. Going down to the daily time frame, we don't really... I guess we have a little bit of demand. It's not a great one, though. Right here. Rally, base, base, rally. And we're kind of trying to hold that area, but it doesn't look too good. I think we're going to push down more. It's a matter of where you would get in, because I don't have a supply zone to enter. But looks like we're going to head down towards this demand, 7.880 on the daily. Drop this down to the 4-hour time frame and take a look. And we do have an area of supply potentially for a short right here. Actually, it's rally base. I was trying to think if this was drop base drop, but it didn't quite make it. I don't know. There's basing right here and good selling pressure that begins. So even though it's not quite what I would constitute as a good supply zone, it does look pretty good for a possible shorting opportunity with the target basically before the 7.880. So I would look for a pullback to 9.155, place a stop above 9.240, and look to short it down to about this 8.150 area. Looks pretty good. So that's what I'm seeing on nat gas. Moving on to gasoline. Clean up the chart again, go to the weekly, and also seeing lots of selling pressure coming in. Doesn't look like this one's going to hold. We should continue to move to the downside. And I don't see any kind of demand until all the way down to the bottom. Kind of rally-based rally right there. So we go down to the daily time frame on gasoline, and we're just chugging away to the downside. You can see we had impulse, kind of a sideways correction. And look at that, we moved down to the 100% duplication of the previous impulse. So if we continue, right now we're on retracement, as you can see, right here. So we have impulse correction going on right now. And we're definitely going to be continuing to move down. It's just a matter from where. So if we're done retracing, we moved about 23.6 or 38.2, then looks like we should push down. So one of the things you could do, and this is on the daily time frame, is basically if and when we break 2.440 right there, you can go short. I don't normally like breakouts, but this may be one possible opportunity. 2.440, there it is. Anyway, sell the breakdown of that. The stop loss would actually go at the next fib level, which happens to be this 24957, I believe. Is that right? 24957 at the next fib level. And then we have targets right here. 2.2623, 2.1167. Do we have a zone down below? Actually, we do. 2.0184. So possible targets on the move down, shorting right here with a stop loss above. So if we bring in, there we are, short position, just get it a little set. There it is. Again, you got target 1. What is this showing? Yeah, about 3.5 to 1 reward to risk. And then target 2, as I was saying here. And then target 3 would be just before this demand zone. So that looks pretty good so far on the daily chart. Let me go to the 4 hour and see if I can fine tune anything. Or see if there's any zones along the way. And yeah, I mean, we're kind of hitting this as a bit of a zone. We have drop, base, base, drop, new low, new low, new low. So if this doesn't break down but goes up, we actually do have a 4 hour zone just above as well. Right here. So you got drop, base, drop, right around that 50%, which is 2.5482, 2.5816 as another opportunity to short. And I would leave the targets at the same spot. Well, actually, no, I wouldn't, because this would actually be your retracement at that point. So you have to be a little more aggressive with the targets then as well. But there's definitely possibilities. So heating oil. Moving on. Go to the weekly chart. Again, big picture. Refresh. And clean it. There we go. So we have lower high on both the indicator and on price. So not really much going on here. Again, we're just kind of pulling back now after we made a smaller high. And if we're starting a downtrend. On the daily time frame, looks like we had a nice little impulse up, correcting down. Probably put this at the bottom of the move. There you go. You see, yeah, we're closing right around 50% retracement. We made it 61.8. That actually lined up with the demand zone. Right there. So we had kind of drop base rally right here as we hit that 61.8 retracement as well. Let's see, what's the trend on the weekly changing? It's still a bit bullish, but it's definitely much weaker than it has been before. And then on the daily chart, again, we've got a pretty deep retracement of 61.8%. So if we do try to impulse back up again, we've got impulse, correction. We're only likely to make it back up right into this area, 4.0134. I don't see us being able to break out to new highs, really. So just be careful. And I don't really see, well, I guess, again, we've already tested that as demand. So if we come back, we should be able to go lower or even through the zone because it's a tested zone. The only fresh demand you have now on the 4 hours down here. Oh, sorry, daily. So let's take a look at the 4 hour. Yeah, don't really have anything else. So what I'm seeing is we're getting a little bounce, but it doesn't look like it's going to go up much more. We may be done with the upward moves. Instead of extending upwards, we may just continue to collapse down. And if I bring this down to the 4-hour, I just don't think I have a trade opportunity here. At least nothing of high quality. No, I really don't. So I just stay away from that, look for something else. Anyway, that's what I got for the energy markets for the week. We can move along now to the stock market analysis. We'll take a look at the different sectors, and I'll go through with you how I actually find these sectors and what I do to find trade opportunities along the way. So, okay, so looking at this week in the markets as we go out to the, let's see, heat maps. Let's do this one. Looking at the sector heat map, we can go to the last 6 months and see that we are still in a safety mode. You know, you see the best performing sectors are the safe havens, utilities, healthcare, staples. So when you scroll down just a little bit, you can see that those are typically the ones that perform when the markets are going down as a safety valve or release, so to speak, or investing in safety, risk off. If we take out the S&P 500, you can see that really the only one that's positive is the utilities, and of course energy is still positive because of the inflationary trade that's going on right now, or pressure. So if we take this down to the last week rather than the last 6 months, yeah, you can still see the same thing. If you take the S&P and put that in, compared to the S&P, the positive sectors are the ones that usually perform while the markets are bearish and continuing to be bearish. If you take out the S&P, everything's negative, but those are the least negative. So it's suggesting that the markets are going to continue to be bearish. So if we go through the individual sectors, let's start off with XLY, and I'll go to the daily time frame. This is the daily XLY, and you can see that we continued our impulse to the downside on the daily chart. So we did hit the measured move of 100% of the previous impulse. Got a little bit of a retracement. Let's see what that retracement was. There's the impulse down, retracement, whoops, bingo. And now we should be impulsing down again because it looks like we finished a 38% retracement with a little bit of a gap up on Friday and a push to the downside. So our next target to the downside, we got some room, it looks like. I don't think we have any demand nearby either. Nah, not really. Down here is kind of a weak demand zone, if a demand at all. Looking at a drop-based rally all the way down there at 142.54. So it looks like consumer discretionary should continue to push to the downside. So if I want to find something that might perform to the downside, what I can do is go to SeasonX here, and let's do a screen. So I'm going to run screener, looking for the last 15 years, and we'll go short term. We're looking for trades between 5 and 30 days on the downside. And let's see, we're going to start this off. I'll put it on the 4th. I'm actually doing the video on Saturday the 3rd, but it doesn't matter. Anyway, when you go to U.S. sectors, if we look for discretionary, there it is, consumer discretionary, and we actually have some popping up here. However, we want the best of the best. So I'm going to start off with 80% or better, and actually we don't have anything there. So let's drop it down to 70 and see what pops up. We got one, CarMax, KMX. So with CarMax, historically, for the last 15 years, that has only got 26% moves to the upside, so about 70+% drops for CarMax. So KMX, let's take a look at the stock. KMX, there we go. And looking at CarMax right now for the daily chart, I don't really see a great opportunity. Looks as though we're kind of stuck in this wide range between 102 and 82, basically, or 85. And it looks as though we're ready to continue to move down, but I don't really have a good opportunity, unfortunately. Just looking for a good trade, and there's no entry. So, if anything, maybe we get a retracement up to this area for a short. That would be your first entry point. At about 95.58 to 96.60, see we have drop base and then the drop down. So that's what I would look for an entry. As far as targets now, and let me go ahead and put myself a note here to make sure that I follow up on these for next week so I don't have to watch the whole video to remember. But it's KMX, right? CarMax 240 short. There we go. I'll be able to follow up these. Anyway, if we look back, no, not really great demand zones there. I'm just trying to figure out the target for this particular trade if we do end up taking the short. And here we are. Nothing really. Maybe we got a little bit of rally-based rally right there, but it doesn't look great. As far as the high, let's see, 80.47, close 80.44, so that's inside. Yeah, I don't think that's a really good zone. Got kind of weak movement to the upside out of that area, so that means we can keep going further down. And I would say this is actually the better demand zone right here. Kind of a rally-based rally off that area. Nice bullish pressure. Yeah, that's definitely the better target, number one. We can also use Fibonacci extensions to see where the target should be as well. And let me clean this up. There we go. So going back to current price. Yeah, I don't see us making that big of a drop that quickly. So, like I said, if I wanted to have an additional target that's a little bit more realistic, right here we have an impulse down. We've had a little bit of correction. We'll see if we can pull back all the way to 95.58. There we go, 95.58. Perfect. So I would say for the shorting opportunity, 95.58 for the short, where you've got the stop loss in 96.60 and target number one, 85.01. Okay. Okay, so place to stop just above that, probably about 96.65 or so. You really don't need to give it too much breathing room, but yeah, that's probably good. I'll go ahead and do this. Settings. As I said, 96.67. We'll do that. And I'll bring in the text. Stop loss. There we are. And might as well change that to match. So we're looking at, again, entry at 95.58 with a stop above at 96.67. Target 1, 85.01. Target 2, 78.47. And that is the first opportunity for a short based on the seasonal move to the downside for XLY. So if we continue on moving across here, next is communication services. So we're looking at XLC and looking at the ETF XLC. Go to the daily time frame to look at that bigger picture here, refresh this down, and you can see that we're stuck in a sideways channel. So we're just bouncing off the bottom of the channel right now. There's no real great opportunities here. I think we're just going to kind of drift a little bit lower, but really, again, not very powerful. So we move on to the next ETF, which is XLK for technology. And in XLK, we've been very bearish. You see there was a high I pointed out, and it was not above 60. This would have been last week, I believe. Yep. 1, 2, 3, 4, 5. So you see we had that last week. This is what the market looked like. And I was saying because we had a high below 60, we're likely to continue to push to the downside on technology. And that's exactly what's happening. We followed through to the downside. So we are at a little bit of demand here, aren't we? You can see we've got rally, base, rally, and that bounced once. Now we've gone deeper into the zone. We're getting a very small bounce, but too much bearish momentum. This is just a small bounce. It's likely to continue to move to the downside. So I would expect continued selling pressure coming in. And if we're looking at the last impulse down with the retracement for it there, I don't know if we're done retracing. We might have a little bit more room to go. Let me go to the 4-hour time frame and see if we can find any kind of a zone here. Nothing really great. We do have drop, base, drop in the area 38.2, but I don't see anything as far as a great opportunity. I do see technology should continue to sell off. So if we want to look at the seasonal move for technology and which stocks in that sector should drop, let's see, we got information technology. I don't really just have a technology, do I? Industrials, financials, no. Just have, okay, well, we'll try that. So again, looking for higher probability shorts, and we got two at 80%. We got AMAT and FIS. So AMAT, as you can see, a little bit choppy, but we should get some movement down. So let's take a look on the daily time frame first. And we got that weird, wait, I typed in wrong, AMAT, I missed one. There we go. That's better. So as you can see, we are moving down. We're getting almost the exact same chart with a little pullback that we saw in the sector. And, well, we're kind of close to this demand. Not quite there yet. We've got an area right here. Drop, base, 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 It's off a little bit. And rally. And you can see we've already tested that demand, but same as we were on the sector, very bearish. We're just getting a small bounce before we go lower. So if we could, first of all, we put in the retracement here on this time frame. There we are. And go down to the 4-hour time frame. I don't really have a great supply zone. That's going to be the problem for the entry. Maybe 50% retracement is a good one, but the close 96.53, the low 57. So it doesn't close inside. I thought there might be a drop-based drop here, but there's not. So I would say, if anything, we would maybe look for shorting at the 50% retracement with a stop loss at 89.90, just above that. So if this is the case, 97.02. There we are. So that would be the shorting opportunity. And the stop loss, oops, would be about 88 or 98.90, sorry. There we go. Coordinates 98.90, as I was saying. So that would be the Fibonacci retracement, basically 50% on the way back. If we can get up to that area, that might be a good short. Now, as far as the target goes, we can look to see where our next target should be. If we're using this Fibonacci extension, we have the impulse down, waiting for the pullback here right now to 97.02. It's kind of in the area, didn't quite get it right, so let me fix that. 97.02, there it is. So now we've got the targets as well. So another possible short here on AMAT, Applied Materials. Let me write this down. And again, that's 240 short. Perfect. And you're looking at shorting 97.02 with a stop at 98.90 with this target number one, 87.06, target to 80.91. There's another one that was there as well. Let me close this and go back. It was Fidelity Information Services, so FIS. Again, we can take a look at the seasonal move for this. And boy, does that look pretty bearish. It's 80% of the time it's gone down about 3.25%. So that's a good one. Let's take a look at FIS. It's not FIX, FIS. There we are. And if we go out to the daily time frame first, we see a very bearish security with lots of momentum to the downside. No demand nearby. Oh yeah, that looks like it's going to continue to move down. As far as an opportunity to get short, well, if we rally up, we do have, I think that's rally base drop, but it doesn't look very good. Let's see, what's the close here? 93.08, the low. 93.05, so that is inside. And that doesn't work as a zone. So again, if we're looking at a retracement of our most recent impulse down, go to the 240 and see we don't really have a good supply zone to short here either. Now, I mean, we do have base drop at the 50% retracement, but it's not a great zone right there. Let's make sure. Oops. That's what I wanted to do. Anyway, we have drop, base, drop, new low. So yeah, if anything, we might pull back, and you could actually go short at the 93.07 inside the middle of that zone, which is the Fibonacci retracement at 50%. So again, it was 93.07. There it is. That would be the entry for the short. So let me change the color so I'm not confused with the stop loss. And your stop actually could just go right above this 93.70. So we're looking at basically, clone this. There we go. And so 93.70. Oops, let me see. Do I have a template for this? Stop loss, perfect. And the stop loss should be about 93.78. That sounds good. Just above the zone right there. So we got the stop loss entry And, we can enter anywhere inside of this zone, but really the best entry is at 93.07 because it lines up with the Fibonacci retracement inside of a zone. Now, as far as targets go, we can, trade the next impulse. So we got the retracement back. And if we get to 93.07, pretty close, we got target number 1 at 88.63, and then target 2, 85.89. So basically, this is what we're looking at. 247. Yeah. So shorting in this area with a stop loss above, target 1, target 2. And that's it for Fidelity. And let me write that one down too. FIS 240 short. Awesome. Okay. So we move along here and take a look. Let's see, under, oops, wrong page. Let's see, we've done technology, so we move on to industrials, XLI, and take a look, see what's going on there. XLI, again, on the daily time frame. And on the industrials, we're almost at an area of demand. We haven't quite gotten there yet, but it looks as though really not much going on here. We're just continuing to trend a bit to the downside. So, yeah, it looks as though we do have enough momentum to get through the demand, as you can see. So even if we do bounce, it's going to be a very small bounce as we hit demand. So not really much to play there. Next sector we move on to would be the materials, or XLB. So we'll do that, XLB. And moving into those materials, also not really much going on here. Again, very bearish. We tried to move up, but we didn't have much momentum, so we broke down and made fresh lows below 40. I don't see any kind of demand or anything to hold us up, so we're likely to continue to drift to the downside. As far as the sectors, and looking at the maps here and the rotation, industrials, let's see, do we have anything on the short side? Old Dominion still, and it's about 73%. That's ODFL. Looks pretty bearish. You can see it gets much more bearish a little bit later this month, so about the 15th to October 2nd. Yeah, 80%. So right now it's not quite as bearish, but we'll take a look. ODFL. And basically I was waiting for a long opportunity, or we did have a long opportunity. You can see we hit that long there and bounced. I knew that name sounded familiar, but we don't really have much else going on right now. It looks like we're retracing before we continue to go lower. So this was an old long, but now, as I said, it looks as though we're looking at maybe a short. Let me go to the weekly chart. What happened there? Weekly. On the weekly chart, we tried to rally, couldn't get into bullish territory. We still have time until the earnings come out as well. So going to the 4-hour time frame, I was looking to see if there's any sort of a target to get in. There really isn't. So I'm going to sit back and just wait on this one, look for better opportunities. Oops. So continuing to move on in the sectors, let's see, we got energy after the materials, right? So we'll go to XLE on the daily time frame. And on the energy sector, you can see I was looking at a Fibonacci retracement, which it did do about 50% retracement on the pullback there last week. We went a little higher before we dropped, but you can see it was basically a 50% retracement. Also a little bit of a rally-based rally demand there as well. And we bounced off that nicely, so we may be continuing our march upwards at this point. I guess the inflation is not over, unfortunately. You can see that we do have right there, that's the demand zone I was referring to, rally, base, rally with follow-through. We've gone very deep into the zone after divergence, so we could see, yeah, it looks like it's trying to hint at more movement upwards, but I don't really have a great entry spot. And we've already left the zone, so trying to get in now might be a little bit late in chasing, and I don't want to do that. If we go down on the XLE, yeah, I don't really have a trade opportunity. However, we should continue to move up towards 86.37. So if I start looking at my scanner for the energy sector, there we go. Now we're going to look for the long side, and we do have an 80%er, OKE, One Oak. So we'll take a look on the sector rotation. And unfortunately, we already missed this one because it also bounced off the demand already. Right there, you had drop-based or rally-based rally. It's already bounced, and it doesn't look too good. Actually, it doesn't look like it's going to continue. Go up to the daily time frame. Yeah, I don't really have a good opportunity there at all. So what else do we have pop up? Baker Hughes, Apache Corporation. They're only at 73%. ConocoPhillips. Oops, again, I hit the wrong button. So APA, that's Apache. There it goes. And I was doing some analysis on that one, so I'll clean it up. Yeah, I don't really have a good trade opportunity. We had an impulse correction. We're trying to impulse back up again, but there's not really an entry to be had right now, so we'll wait for better settings. ConocoPhillips was another one, and also Baker Hughes. And neither one is giving me a trade opportunity. BKR. No. All right, so we just wait. Now we get into the flight to safety, if you will. And remember, we were looking at these ones that are supposed to be going a bit to the downside, but now we've got staples, healthcare, utilities that should be moving a bit to the upside. So if we start off with consumer staples, it's XLP. We'll start off there. And you can see, been pulling back a little bit. If I go to the daily time frame, we've got a nice pullback going on. We're kind of coming into the origin of our previous rally. Doesn't look like a great demand. Maybe on the weekly it does. Now it's just sideways basing. You see rally, base, 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 and rally. So, interesting. We might get a little bounce here. Again, that's the leg. 1, 2, 3 basing candles. Leg out, new high. Kind of missed it on that one though. See, the weekly held really, really well. It stayed below 60. So we're overall somewhat bearish, but we might get a little bounce here. Go down to the daily time frame. I don't see much of anything. Yeah, I'm still going to have to wait on the XLP. I don't see anything great. If we go into the seasonal moves for the consumer staples, there we are. See if there are any bullish opportunities. And I'm going to go out to 80% win rate. Nothing there. So we had, let's see, 75. I had 70. Yeah. So it's only about 73% win rate for the last 15 years. But there's a few. You know, Hormel. No, nothing going on here. As of right now, we gap down below demand zones or whatever that previous zone was. Keep this clean. But I don't see an opportunity right now. Let me see. We had Archer Daniels. And we've had a small pullback. This is actually looking pretty bullish. You can see we had just a very small pullback. Looks like we're going to continue to push higher. I don't know if there's any kind of demand for an entry, though. Not really. Molson. And that's more bearish than anything else. Going into the daily time frame. We are coming down, or maybe we've already bounced off that daily demand, I think. So unfortunately, I don't see it. Again, drop, base, rally. We don't have another opportunity to get in. This was a really nice trade, but it's too late. You can see we had impulse down. Nice little divergence. Maybe not, actually. No, it wasn't divergent. It was still pointing downward. But we held demand, believe it or not. It looks like this is just a temporary hold. You can see when we hit the demand zone, we were way below 40. And basically, when you're below 40 and hit demand, demand will not stand. So that's suggesting that we're going to continue to push down. You already see it right here on Friday with the big topping tail. So really, this is likely to break that demand zone and continue to move down to new lows. May push down. Really don't see any good demand. I mean, there's a little bit of basing and rally right here at about 47, maybe a little about 46.5. So as far as trade opportunity, I don't know. I would definitely look more for a short. It's just a matter of where. All right, so if we take a look at this a little bit closer here on the daily time frame, I can look at a Fibonacci retracement that might be going on right now. So we'll go ahead and bring in the retracement. Get rid of this demand zone because it is likely to break. And we'll have to see if we're done with the retracement or if we have more to go. We go down to the 4-hour time frame. Oops, hit the wrong button here. And on the 4-hour time frame now, the nearest supply is actually a bit higher here. Right near the 50% retracement, as a matter of fact. You can see. So we have drop-based drop at that 50% retracement, and if I bring in a supply zone here, let's see, 66. Put the stop at 53.73 perhaps. As you can see with this entry, 53.18. And as far as the target, if we do the retracement that deep, we're looking at, let's see, 53.18. There it is. So then we have our targets. But I don't know if we're going to pull back that much if we end up hanging out in this area. But if we can pull back, as I was saying, there's your trade on tap, Molson. So you got shorting at 53.18 with a stop at 53.73, target 1, 49.26, target 2, 46.83. And we'll just wait and see if that happens. So that's what I'm seeing right now. As far as the other ones, let's see what else we have here. Coca-Cola. And I definitely looked at this before. We'll go out to the daily chart, refresh. Yeah, it was a 60-minute trade a while back. So let's go into this time frame. Don't really see anything here. Again, looking like we're going to break down. But no, we don't have an opportunity right now. It's already gone. General Mills, GIS. Pretty much sideways. Not really seeing much going on there. And what else do we have here? Oops, wrong button again. Kellogg and then Tyson Foods. Kellogg also not really giving us much. It's just basically dying off in momentum. So TSN, Tyson Foods is very bearish right now, as you can see, and doesn't look like it's going to stop anytime soon. We should be able to break down towards the daily demand way down there, if that even happens. But as far as entry now, I'll go down to the 4-hour time frame, and it's not the best supply, but there may be something right here. I say it may not be the best because it's kind of weak movement to the downside, but you have drop, base, drop right there. And like I said, the leg out candle isn't very powerful, but if you wait for a little bit of confirmation, make sure that it actually does break down, there could be a shorting opportunity here. So let me go ahead and fix this. Go into template, stop loss, and adjust it. It's about 77.04. And again, for the targets here, I don't think I had a target demand zone, so I'm going to go ahead and just move, let's see, my Fibonacci retracement up 38. Oops. If I can get it right. There we go. I just had it. Perfect. So we're looking at targets now of 77.23, 69.67. If we're shorting Tyson Foods, again, it's TSN 240 short. That way I'll be able to track this and keep an eye on it for the rest of the week as well. So moving on to the next sector. Let's see, we just did the consumer staples. We got healthcare. So that would be XLV on the daily time frame. And looking at healthcare on the daily time frame, you can see that we're continuing to move downwards. We got lots of bearish pressure. We're not at the demand zone yet, so had a little pause, but it looks like we're just continuing down. Don't really have any great trade opportunities. We'll have to see if there's any kind of shorting opportunities on the healthcare sector. Man, the upside looked okay, I guess, but down, there we go. We got some 73%ers. So RMD, we'll try that first. I'm not really seeing anything. It just looks like we're continuing to push down. If I look at 4-hour time frame, no kind of zones nearby. That's fine. We have VRTX. And now we're getting close to demand, so there's really not much opportunity on the short side there for that close to demand. Insight, INCY. Also very bearish. We do have demand that we're coming up to or down to, but we're not quite there yet. There's really no opportunity. So I'm going to move on. So our next sector from the healthcare has been utilities, which has been one of the more bullish markets out there, or sectors. XLU, very, very bullish overall. compared to the others, and you can see why. We've had impulses up that we were expecting, and we haven't, well, I guess we came close to our target here and pulled back a little bit. So let's go ahead and clean this chart up and basically measure out what's going on. We have the impulse up with our current retracement down. Look at that, we hit 38.2% and couldn't get below 40 on the RSI. So this is actually still bullish for the sector. And if we do impulse up again, that's the end of the retracement, we're impulsing up. Now I've got some possible targets as well. I'm going to remove that. There we go. Because we're done with the retracement, it looks like. And we're going to continue up, and we got targets at 80.31 and 84.19. As far as getting on board and riding this higher, I just don't have an opportunity right now. Yeah, I got nothing. So let's look at the sector itself and see inside the utilities, is there anything we could possibly buy? So we go to utilities here. We're going to the upside. And we have a couple 80%ers. If I bring this up a little higher, we have the Southern Company and Public Service Enterprise Group. So, SO. And I've looked at this before on the daily time frame, maybe? I don't remember what it was. No, it was 60-minute time frame. We looked at it long and it made it up to the target. I don't know if I got in though. You can see how strong the stock is. It's still very, very bullish. Let me take a look at Southern Company. There we are on the daily. Let's do this. There it is. So what has been going on is we had a nice rally from these lows right here on the impulse, and we've corrected down almost 38.2, not quite there. And maybe if we went right from the bullish candle right there, that's a little bit more accurate. Anyway, it looks like we're impulsing up, although we're having a failure here. We could break down, and the failure is we couldn't get above 60 as we tried to rally up a little bit. So that's kind of interesting. We might see more bearish pressure coming in. If we do continue up, what we should see is, the continued impulse up. Now, originally, I was looking at this as a possible buying opportunity because, according to the seasonal move, it does usually go higher 80% of the time with about a 1% average return. So we should expect bullish move for the next, how long is that? Sorry. 4th through 17th, so about 2 weeks, roughly. Anyway, I'll go down to the 4-hour time frame. I don't really see a good trade opportunity, actually. It looks like it's getting weak. We tried to make a higher high, but we couldn't get the momentum in there. So actually, I'm going to skip this one and move on to something else because this looks like it's going to be a bit risky to try to take a long. The only other one was PEG, P-E-G, Public Service Enterprise Group. It says 80% with a 1% return, but it's kind of choppy. So, if I go to the daily time frame, you can see we're just pulling back right now. And there's no real opportunities to enter in. So no, I'm not going to take it. It doesn't look good. Even on the 4-hour time frame, we're at demand, but we've been here, bounced, and came right back into it. This is going to push through. So I don't really have a good trade opportunity in either direction. Maybe if we see more bearishness, I doubt we're going to rally this high, though. You can see there's a nice supply zone here. You have rally, I'm sorry, drop, base, drop. That doesn't even fit. Doesn't work. So, no, I don't have a good trade opportunity. Just got to be patient, wait for the right ones. All right. Next sector was financials. So we have XLF and then finally real estate. So we take a look at XLF. And on the real estate, financial sector, you can see we've done a retracement now of 61.8%. I had been marking that off from that move up and the pullback. We had a pretty deep pullback. Not sure if we're going to be taking off. We did hold above 40, but it looks like on Friday we did close below 40. So we try to make it higher and continue to move up, but it looks like we're not done retracing. This is going to keep falling, maybe towards the 78.6% retracement. As far as opportunity, don't really have any right now. Basically, we've got to reverse this, perhaps. I mean, like I said, we're impulsing down now rather than up. It's 31.57. Oops, there we are. And basically what we're doing now is we had impulse down. Let's go to the daily. Not sure if I should go from the high, probably from the high to the low right there. Yeah, oh yeah, look at that. 38% retracement, and now we're impulsing down to our next target. That's what I was thinking. And there it is, your target as well. So the question is, where do you get in, right? If we go down to the 4 hour, I don't think we had a zone. You know, we pulled back 38.2 already. We don't really have an entry here. However, with financial sector, let's see if there's anything that we might be able to play. If I go into sectors, financials, onto the short side now, 80% winners in the last 5 to 30 days. Let's try this one bigger. Nothing. And long-term swings, nothing. And we could check on the last 5 to 30 days, and maybe I widen a little bit to 70% winners. And there we go. So we only have 70% winners. Nothing great, though. And we could take a look at some of these NTRS. Northern Trust, again, looking for shorting opportunities, and I really don't see much. There's a great zone up here, but I don't know if we're going to get up there. Definitely looks bearish. Let's see, CINF, so Cincinnati Bank. Again, pretty bearish, but where do you get in? Well, there is supply right here if we can rally it all. Let me take a look at the daily for a moment. And yeah, it might be something there. We go to the 4 hour, and this is what I noticed right away was that we've got, nope, that doesn't fit. Drop base, but that's not a leg out. So no, it doesn't work. I take it back. I'm looking for the best opportunities. I'm just not seeing them. We go to BK. It's Bank of New York Mellon. And once more, nothing there. So I think I'm just going to hold off and stick with the ones I found so far and just look for the high quality opportunities. The last sector is XLRE for real estate. And this was Head and Shoulders we talked about last week. And look at that, it is following through nicely. So hopefully you're able to get in on this. Remember, we had left shoulder, head, right shoulder. Look at that. We broke down and even retested. That's exactly what I was waiting for. It was a breakdown and retest and a shorting opportunity. So we're more than halfway to our target. If you got into this trade, great job. If you missed it, well, you better start watching every week and taking these opportunities seriously. They're out there. So either way, if you're in it, then you want to make sure you maintain your moving average, maintain your trail stop. I typically use 8 and 21 moving averages on the time frame I'm trading. So right there, your stop should be above the moving average, although it'd still be a break even right now because it hasn't really moved down enough. I basically would exit if it closes above the 8 or if it breaks the 21 or hits my target. So that's doing well, just moving down. So it looks like real estate's going to continue to drop. Let's see, did that pull back to anything? Not really, just had a little pullback. So if we go to real estate, let's just take a look real quick and see. Under sectors, real estate, on the downside, we definitely have some 80%ers. There we go. Actually, a 90%er. Look at that, AMT, American Tower. So let's take a look at AMT. As well as right here on American Tower, the seasonal move is pretty good, 90% to the downside with 3.25% rate of return. So let's see what kind of a trade we might have here on AMT. I happen to be, let's go to the weekly chart first, and got a little more bearish. You can see we couldn't get above 60. That was kind of the death knell for the bullish move. We go down to the daily time frame, and it's already pretty deep into this trend, but I don't see a stalling here. I think it could continue to go down. We do have drop base rally. There's a lot of room to get there. Oops, not retracement. I wanted zones. There we go. So 236.17 has moved to the downside. So I got to figure out where to get in on this. If we go down to the 4-hour time frame, and we've had our impulse correction, we already missed it. Dang it, that would have been a great short. Oh well, not going to chase it, but you can see drop base actually doesn't even qualify well, but yeah, that would have been the opportunity. So just going to have to wait and see if anything else forms. I don't have a good entry right now. Even on the 60-minute, nothing here really. So we got to wait and see if there's some sort of a new zone that forms, but this should continue to drop until we hit 236.17. It's just a matter of where you get in. And I just don't have an entry spot yet, so I'll watch AMT. So watch, oops. Pen went dry. AMT, watch. That way we know. All right. So moving along now, we're going to jump out of here and go to the Indian markets. So we'll start off by looking at the Nifty and bring in my indices here for the Nifty. Let me just go back. There we are for the week. Oh, that's not August 28th. We are now in September. I forgot to change this. So for the week of September 4th, here we go. For everyone, Kim Cho. Anyway, and moving into the markets. So looking at the Nifty, I'll take us out to the weekly chart first, clean up the chart. And overall, we still can't seem to get above 60 to really maintain bullishness here. You see we hit that high, broke out of the downward trend, but then broke down again. So it's just back and forth. On the Nifty, I'm surprised. We had a big gap down, but rallied last week. So, yeah, I don't really have a very strong trend right now in either direction. As you can see, we kind of broke out of that downward trend. It was a false break. Then we retested it on the bottom side, and we'll have to see if we're going to be continuing to move down. It does look kind of bearish, the fact that we couldn't stay above 60, and I would say that the Nifty wants to drop down towards this area of demand at 16,248. Going to the daily time frame, again, just not seeing a whole lot here. We lost our commitment to the bullish trend, really just kind of going sideways as of right now. Okay, so looking at this Nifty again, looks like we're going to be dropping down. We've got maybe a little bit of demand here on the daily time frame above the weekly demand. So 16,641 might be our target for this week if we can break out of this kind of sideways funk that we're in. We do have rally-based drop supply right above as well at 17,852, 17,992 to watch for. So overall, we're kind of pushing up against, losing momentum, I would say. And I think we're going to drift a little lower. It doesn't look like we're going to have a big move down or a fast move down, but it does look like we should drift downwards. Yeah, that's what I'm seeing. Even on the 4-hour chart, not much has changed. So kind of drifting a little bit downwards. If we go into our heat map, not here, I want to go to this one. We'll change over to the Nifty. There we are, Nifty 50. And let's see the performance for the last week. Oh, wow. You can see right here, the tech is bearish. That's dragging the markets down. But we've also got the banking sector, finance, that's actually holding everything up. So we got a battle going on, and we need to see which one's going to win. Are the banks going to be able to drag everything up, or are the technology services and energy minerals going to drag it all down? And we'll start off with the big player, Reliance, here. Let's take a look at Reliance. And bring up the stocks. There we go. So in Reliance, yeah, definitely continuing to move down. As you can see, let me clean this up. Let's go to the daily time frame. And we're on the bottom side of the range that we're kind of stuck in back and forth. But it looks like we want to break down more. We had highs that weren't above 60 on the RSI. So it looks as though Reliance should continue to push lower on the daily chart. Yep, down to the 2457 area. So we got room to go downwards. As far as entries, intraday shorting might be an opportunity. I just don't see anything right now. Let's see if we break this low and retest it from below. 60-minute. It's not great, but maybe this turns into something. It's not a supply zone yet. And I say it's not supply yet because you have drop-based drop, but you don't have the follow-through. We need one more new low on the candle. But if we get that, one more red candle with a fresh low, that could become a supply zone to sell short at 25.43 with a stop about 25.60, and you want to target before you hit this area of demand. So you want to get out maybe somewhere in this area around 24.70. So that's what I'm seeing right now for possible intraday on the short side of Reliance to take advantage of that downward move. So what else we got here? ONGC is also pretty bearish. We can take a look at that. Looking at the bigger picture, daily chart. Let's see, what do I have going on here? This was daily I looked at before. None of the demands are holding. I mean, actually it did the first time. I take that back. You see, both of those demand zones touched the first time and held, but the overall trend is down, so it eventually broke. This is just a retracement. We're going lower. That's all I'm seeing right now. You had impulse down. Right there. Yep, about 50%. And then we are now marching downwards. First target is 118, second target 104. If we were to look at the 4-hour time frame, I don't know if we're going to have anything as far as opportunity now. No, this demand's already been tested. It's likely to break. So, yeah, I just see bearishness here. That's going to continue dragging the markets down. If we take a look at TCS and Infosys, nothing here to hold us up. This too should drop until the next area of demand. On the daily chart, next area of demand is here. Oops, what did I do? There it is. So we got room to go to 30.28.90. If I go down to the 4-hour or even the 60-minute, and we missed it right there, it was a shorting opportunity. Drop, base, drop, and that was the retest for the short. Dang it. But that's what you're going to have to look for, is intraday opportunities like that, where if you get pullbacks, you go short until it closes more of that gap. So there may be more supply zones that form. Your ultimate target here is going to be that 30.28 on the move to the downside. So continue to look for those opportunities. Infosys, again, going to the daily time frame, still bearish. We're in demand, but we're going to break through because we've been very bearish. We should be able to go down to new levels. And if I bring this to the 4-hour, there's no entry opportunities either. Now, as far as the strong sector, that was it HDFC Bank? Right, it's the banking sectors. Yeah, HDFC Bank, SBI, Bajaj Finance, Kotak, and so on. And we impulse and retrace 100%, but overall, this is looking sideways. Not really seeing much momentum in either direction. We bounce off of a little bit of demand, as you can see, but I don't see a whole lot. I would watch out on HDFC. Remember, this has been one of the more bullish stocks, holding and pushing the markets higher. So if we end up holding 1493 here on the daily chart and we turn down, keep an eye out, because we're having struggles getting above 60. That could turn the Nifty to the downside as well as the Bank Nifty. Let's go State Bank of India. And on the daily time frame, bigger picture, we could be in for a little more bearishness on the Nifty, because this is trying to move up. Barely got enough momentum to get higher. So it looks like this could be a false break and a push back down into the sideways movement that we've been getting. I see it rolling over right now, trying to fight to go higher. It's the bottom tails, but the mixed red and green indicates it wants to roll over and play dead. So be careful with that. Let's take a look at the Bank Nifty. Okay. No, hang on a second. Okay, so on the Bank Nifty, again, we'll go out the big picture first and work our way down. Start off here on the weekly chart, and we broke out of the downward trend that we had been in for a little while here. As you saw, the bank sector was kind of strong. Never even retested. We're just showing lots of bullishness here. So, let's see. Yeah, I don't really have much of a retracement at all. I mean, we have impulse, correction, impulse. So it looks like we could continue to go to the upside here on the Bank Nifty. There's no reason to stop it. And that's the sector you saw that was strong, right? Yeah, banking. So it looks like it's going to continue. As far as opportunities, I don't really see anything as of right now. Just keep that in mind, that we're kind of a little sideways, but should be able to break out. And I don't like the chase price. So when we do get breakouts, I often wait for a pullback first before going long. So if you're looking at the Bank Nifty as an opportunity to go long, you need to find a close above 39,732, then wait for it to retest that area as a demand zone. And let me see, ATR, there we go. basically, if you were to buy on the retest, again, I wait for a close above, retest 39,732, and then place the stop 1 ATR below the entry. So the entry is right around 39,732. You would subtract 652, which is the ATR, and your stop loss would be 39.80. So it'd be 39. Let's put that in there. It didn't go. 080. And style, template, stop loss. There we go. Get rid of this guy now. So that's what I would look for is, again, a close above 39,750. Then the retest of that area would be the long opportunity, stop loss, target 1, target 2. That's it, pretty straightforward. And you can look to see if there's bank sectors, bank stocks are going to be participating like that as well. I didn't really see anything jumping out. Like I said, when I looked at SBI or HDFC, we can look at Bajaj Finance. There we are. And yeah, again, there's not really much there. Going to 4 hours, nothing there. Yeah, a little bit of possible rally-based rally or down here, but I don't see us pulling back that much. So no, it doesn't look good because that didn't break out the new highs. Here we're looking a little bit more bullish. Then notice we did break out the new highs. So this is Bajaj Financial Services Limited. This looks much more bullish, and there's your opportunity at 16,190, 16,054 for the long. Again, place a stop below. So I'll go to my template, change that to the stop loss, and we're looking at 16,005. Come on. 0. Maybe even below that a little bit. There we go. So stop loss right around 16,04960. And let's see, can I set that a little bit different? Yeah. Bottom. So targets at this point would be above, and I don't think I have anything overhead, so I'm going to use Fibonacci extensions. It's a pretty deep retracement if it does get there, but we'd be looking at 90. There we go, pretty close. Target number 1, 17,508, with target 2, 18,324, and then of course target 3 if we wanted it at 19,642. So that's what I'm seeing as a possible long opportunity. Let me go and write that down. Okay, got it. So that's what I'm seeing right now on the Indian markets. And finally, we can take a quick look at crypto, but again, I don't really see much going on. We're in the middle of the crypto winter, and it's been lasting for quite some time. I just don't see it giving up anytime soon. So taking a look at crypto, bringing up my charts here on the daily time frame for some of the top ones. Let's see. Oh, what happened there? For some reason my Bitcoin got erased, or no, that's it. That's Bitcoin. So we go to the daily time frame and refresh, and you can see it's really not doing anything. If I go to the weekly chart, big picture, we're just sitting in this demand and not going anywhere. So we're really just losing momentum. Not, it's not bearish momentum, it's not bullish momentum. There's like no momentum. So there's not much going on here on the weekly chart of Bitcoin. And even going down to the daily chart, not a whole lot going on there, is there? We're just stair-stepping our way down again. And it looks as though we got lower lows on the indicator and price. So we could work our way down. As far as the demand, let's see. Oops, wrong one. Sorry, hit the wrong keystroke there. Let's try this again. There we are. If we go all the way back in time to 2020, yeah, there's really nothing here. The daily demand is here. That's a tested demand zone, as you can see, from 2020. And below that, there's nothing here, really. A hold us up. We could get a little bit of rally. No, not much there until you hit that weekly at 11,508. We could get there. I just don't see anything to hold up price on Bitcoin. Where Bitcoin goes, so goes pretty much everything else. So it doesn't look like the crypto winter is over anytime soon. We're going to continue to drift lower. Ethereum, same thing. We ended up hitting a little bit of supply. I think it was a 4-hour, if I'm not mistaken, maybe even 60-minute. If you go back, no, it was 4-hour. There it was, drop, base, drop. You see, we hit that and dropped. So we just don't have any kind of momentum whatsoever on these cryptos. It doesn't really seem like anything other than day trading as being opportunities lately. XRP, daily, looking very choppy. We are coming down towards a little bit of demand on XRP right here. But we're not going anywhere. We hit it. We're just going sideways because Bitcoin is kind of driving everything else, and it's just not driving it anywhere. Although Cardano here, ADA, that had a really nice spike today, about 6% to the upside, finally broke out. Let's see, going into the 4-hour time frame, there's that big move up. It bounced from this area of demand. Look at that, drop, base, a little bit of rally. That's kind of surprising because it's not a very strong zone, but if we were going to continue to move up, the target would be here. You can see on the 4-hour chart, we do have an area of supply way up there on Cardano at about 53 cents, 54 cents. Let's make sure. Yeah, 53.48. Unfortunately, I don't have a really good entry right now. Let's try a 60-minute time frame and see. Yep, there we have it. So there may be something here on Cardano going long at about 47.19 with a stop loss below. Maybe do 46. I could probably go higher than this. It's going to take forever. So let me see. 46.80. Maybe 46.78. Something like that. And first target, let's see what we've got here as far as targets going across. There's one target right there on this 1-hour time frame. And then the second target, I would say, yeah, right there before you hit the 4-hour zone, which also you see on the 60-minute here. That looks better. So that would be my pick on Cardano. Let's go back to the current price, put this all together. So we've got a long opportunity, as I said, at 47.19 with a stop at 46.78. Target 1, 48.71. Target 2, 52.42. So we'll mark this one down. ADA, USD. On the 60-minute long. And that's it. So that's pretty much what I got for you for this week. Hopefully you enjoyed the Wendell effect. Let me know if you got any questions on anything. I give you my email address. It's just my name, brandon.wendell.cmt@gmail.com. That's a temporary email address that you can use. Let me go and bring it back up again. That way you've got it. It is, oops, where'd it go? Right here. There you go. So you can go ahead and keep in touch with me. Let me know if you'd like to see anything in particular in the video. Hopefully you enjoyed this. Instead of doing the pre-made slides, I decided to go through live kind of what I go through for the analysis so you get a better feel for it. And be sure to check out all the chart school videos as well. There's a lot of good ones out there, a lot of good updates and info. Anyway, until next time, trade safe, trade well, and take care, everyone. See you soon.